Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Elon Musk to drive U.S. President-elect Donald Trump's government efficiency push. The billionaire will lead a new department with Trump's former Republican rival, Vivek Ramaswamy. The QIA names its America's CIO, Mohammed Al Sowaidi, to lead the $510 billion sovereign wealth fund. And investors lap up the latest IPO in Saudi Arabia, pouring $35 billion into financial services firm United International Holdings. It has just gone 8 a.m. across the Emirates. I'm Joanna Versace, still at the COP29 conference in Baku, Azerbaijan. This is our third day here. We're going to bring you more key interviews coming up in the next couple of hours, including an exclusive with the Greek Prime Minister Kyriakos Mitsotakis. So stay tuned for that in our second hour. But for now, as ever, we're going to kick off the show taking a look back at how some of these markets have been faring. And what we're seeing is finally a bit of a dip in terms of the market rally. Some of the momentum has fizzled out in the last 12 hours or so. We saw Wall Street close slightly in the red yesterday as some of the exuberance post the U.S. election started to die down a little bit. Tesla stock also down 6% yesterday after 5 consecutive days of gains. Tesla up 45% since Trump got reelected. But the focus today is going to be on CPI. Heading into that big number, we've got S&P futures dipping a little bit, down about 0.1%. NASDAQ also seen weaker, about 0.2%. Taking a look as well at U.S. Treasuries, 10 years. 4.43, so it's sort of holding ground around this point, but we have come a long way in the last couple of sessions. Just to let you know, in terms of market expectations, traders are now pricing in about 2 U.S. rate cuts all the way out to June 2025. It was 4 at the beginning of last week. So again, that tells you a lot about market expectations vis-a-vis the Fed and the state of the U.S. economy. And then a quick look at Asia-Pacific stocks, because the handover from Asia has not been that pretty, down 0.9%. We'll talk more about that in a moment with Avril. But just to let you know that there has been a big divergence between how U.S. stock markets have been performing versus the rest of the world. Quick look at our terminal chart today. It is all about CPI. That is the big number that everyone's focusing in on later today. And this, you want to pay close attention to the core index. It is expected to rise 0.3% in the month of October, while the headline number is expected to advance 0.2%. But if it does rise by 0.3%, it just shows how sticky things have been on the core side, namely led by services, as you can see by that terminal chart. Okay, let's continue the conversation and check in on how markets in Asia are faring. Avril is in our Singapore studio, as always. And Avril, the handover, not so pretty today.
Not pretty at all. I mean, you just mentioned region's benchmark hovering near 2-month lows, and you're really seeing the underperformance in markets with economies that are either closely tied with China, namely Australia, but also the ones that have trade surpluses that have just been running up against the US, like South Korea. Those are the markets that are underperforming today. But apart from stocks, the focus is also on the currency, as the dollar hovers near 2-year highs. That really did a number on the Chinese yuan just a day ago, hitting those 3-month lows. And today, we're getting the sense that the central bank is starting to indicate its discomfort. Remember, yuan weakness is something that traders have been betting on, that the PBOC would use as part of its tools in defense against Trump's potential tariffs. Today, in the yuan fix, 400-plus points stronger than the market estimates. And we're seeing the Chinese currency strengthen as a result. Jumana.
Avril, thank you so much. Well, on to the latest U.S. developments. President-elect Donald Trump has announced that Elon Musk and Vivek Ramaswamy will lead a new department designed to dismantle government bureaucracy. It spells out the acronym DOGE. Anyone's guess why they chose that? For more, Bloomberg's Katya Dimitrieva joins us now. Katya, just give us a sense for what we can expect out of this new department of government efficiency.
Well, there's certainly a message that Trump is sending with the latest announcement for these candidates. And it really is, when it comes down to it, a smaller government approach. We heard this from Trump all throughout his first presidency, or what people are calling Trump 1.0, where he wants a smaller role for government. That means cuts to a lot of really key programs, including Social Security, Medicare, things that a lot of politicians and experts say are generally necessarily off limits. But these are the exact kind of areas where Trump has previously outlined potential for cuts. And so that's sort of the intention of this new department with the acronym DOGE, which is kind of a reference to Doge or Dogecoin, which is something that Musk has favored in the past. We know that Bitcoin has been on quite the rally since the election, so there's clearly a tie there. But it really goes towards his broader picks.
Yeah.
You know, we've heard over the past 24 hours, not just these two candidates, but also folks in really key policy positions, such as Secretary of State, which has outlined a more hawkish view on both the Middle East, but also, you know, we're sitting in Hong Kong, also for China. So those are all kind of right now, if you take them in totality, it's sort of like expect more hawkishness, expect smaller government, expect more for business.
Yeah. So it's interesting that they've come out with this Department of Government Efficiency. At this point, we don't know what the cuts are going to look like or where they're going to come from. And if you put it in the context of markets' expectations of where the deficit is going to go with some of the other plans that Trump has talked about, including tax cuts, perhaps this could be the yin to the yang in the sense that they could push through tax cuts that could inflate the budget, but at the same time cut down on some of the government expenditure through this government efficiency program. So net, it actually could be read as a positive by the market.
Yes, we saw this in 2017, 2018 as well, right? So we had the TCJA, which broadly, added, economists came back and said it added to the deficit, but you also had this rally in markets as people digested this information. It was also good for companies on net. So if you're looking at just the deficit, yes, there will be some balancing, and they'll have to find ways to offset that, because they've also highlighted that they want a smaller deficit, that deficits are bad, it's not good for growth, so they're going to be looking for that as well. But it remains to be seen, because all of these policies are going to be working together. It's not just going to be, more spending potentially on extending the TCJA. It's not just going to be tax cuts for corporations potentially. It's also going to be a lot of things that could hurt growth, like tariffs and other potential moves against China in particular, but also we've heard about universal tariffs. So those are all things that would be negative for growth. And frankly, a lot of people are trying to unpack this in the past couple of days and will be going forward.
Yeah, and at this point, we don't know how any of these ideas are going to be actually implemented in practice, but definitely noteworthy. Bloomberg's Katia Dimitrieva, thank you so much. Well, for more on Trump's cabinet picks, we're joined by Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Ryan, maybe let's just talk about the selection for Middle East, the Middle East positions. I don't have it in front of me, but Huckabee was one of the names that was put forward to be the Israel representative of the U.S. What does that tell us about how the Trump administration is thinking about the Middle East and what they're looking to achieve there?
Well, certainly it suggests that it's going to be something of a status quo ante of the first Trump term. It's going to be Israel first, hawkishness on Iran, and then everything else is more or less going to fall by the wayside. It will become the portfolio of whatever cabinet members might have pet projects or passions within the region. Trump himself has very rarely shown much interest in Middle Eastern policies other than those that involve Iran and Israel, and of course, potential escalations that create security risks for the United States or an energy shock.
How do you think some of the Gulf states are viewing the return of President Trump? And the reason I ask this is because today, the Middle East set of diplomatic relations is very different from how it was in Trump's first term. And indeed, there has been a rapprochement of sorts between Saudi Arabia and Iran. Does the return of President Trump and his more hawkish stance towards Iran disrupt that sort of new paradigm that we're in right now?
Well, yes, to an extent it does. They are approaching him cautiously. Personally, many of these Gulf Arab leaders have old relationships with Trump. They can get him on the phone if they want. So they do like that angle. On the other hand, there is a certain kind of détente that's falling between the Gulf Arab states and Iran. And that's all driven by the fact that during the first Trump administration, the Iranians and their allies were able to attack these Gulf Arab states, and the United States did not run to the rescue the way that they expected them to. And in that aftermath, they are now hedging their bets, and it's much better for them to remain neutral between Iran and the U.S. and, of course, Iran and Israel as well, because that means that Iranian missiles aren't hitting their cities and disrupting their economic plans. So I certainly think that they welcome the return of the personality, and they hope that he isn't as disruptive as he was during his first term.
You know, we still got a couple of months left of the Biden administration, and it seems as though Amos Hochstein is still pushing really hard to get a ceasefire, at least on the Lebanon border. What hopes do you see of the Biden administration actually being successful of getting this done before Trump takes office?
I tend to take a dim view on whether or not there would be a ceasefire in Lebanon before Biden is out, in part because the Israelis have signaled that they're going to be keeping this as an open-ended campaign against Hezbollah. Israel has signaled that they'd like to de-escalate, but they also want to maintain freedom of action against Hezbollah more or less into perpetuity. That's something that Hezbollah can't accept as part of the ceasefire framework. They don't want the Israelis to have this so-called enforcement mechanism where they can strike Hezbollah in case of so-called violations. That guarantees that Hezbollah will continue striking Israeli troops and Israeli cities into the near term. And then today we also got news that that the United States is not going to declare that Israel is conducting gross human rights violations in the Gaza Strip. They had threatened that as early as, I believe, tomorrow Eastern Standard Time, they might cut off military aid to certain units involved in Gaza operations that are conducting operations that are seen as harming human rights. They've said that they believe the IDF is taking steps to improve that situation. And what that tells me is that at this late stage, the Biden administration will not use its leverage over Israel to force them to de-escalate in Lebanon or really anywhere else.
Yeah. Ryan, also, let me just bring up another point as well. And I wonder if this is sort of coincidental with the return of Trump to the White House. But the news that Hamas may be forced to leave their residency, or Hamas political leadership may be forced to leave their residency in Doha, do you think that had anything to do with the fact that Trump is returning to the White House?
Well, certainly the Qataris were under pressure already from the Biden administration to sort of restrain what Hamas is able to do in Qatar, and their position has been a threat ever since October 7th last year. But I think Qatar is trying to position themselves to be as pro-Trump as possible. There will be hawks within the administration who will push for a harder line against Muslim Brotherhood regionally. They tend to see it as anti-American and against American interests. Some of them do link it to Iran. They want Qatar to hew closer to the American line that it sees in places like Saudi Arabia and the United Arab Emirates, which shut out Muslim Brotherhood influence. And I think that Qatar is trying to get ahead of that. They're trying to make sure that they have as few risks as possible with the incoming administration, because after all, when Trump came in 2017, they were promptly blockaded by their neighbors. And while that's not going to happen this time, they nevertheless are aware that within the cabinet and within the portfolios of those folks that are being appointed will be some anti-Qatar feelings based on those ideological inclinations.
Very clear. Ryan, always good to speak to you. Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Thank you very much. Well, up next, a new CEO takes the helm of Qatar's $510 billion sovereign wealth fund as the agency prepares for significant growth. We'll discuss the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Baku. Now, Qatar has named Mohammed Al Sowaidi as the chief executive officer of its $510 billion sovereign wealth fund. The fund is expected to grow significantly in coming years, driven by an expansion of Qatar's gas output. The fund will also focus on investing in the US, Asia, and sectors like digitization and infrastructure. Let's bring in Bloomberg's Matthew Martin, who's in Riyadh and broke the news. A very busy day for you yesterday, Matthew. First of all, just tell us how big of a deal this is. Is it significant that they brought in a new CEO?
Yeah, I think this is a significant moment for the QIA. I mean, if you look at the Mansour Al-Mahmoud. He'd been there for 6 years. Typically, people serve these sort of 4-year terms in these kind of positions. So it to some degree had been expected that there would be a change at the top of the QIA. But as you mentioned in those comments just a second ago, it does come at a really significant time for the QIA. Qatar has invested huge amounts in boosting gas production, so it's expecting to have a lot more money coming in. And so, we're also seeing the QIA look at investing in all of these new sectors, from technology, shifting away from this sort of historical big exposure that they've had in Europe and try and rebalance into the US and into Asia. So bringing in the guy who had run the US for them is, I think, a symbol of where some of the QIA's ambitions are going to lie in the future.
So, Matthew, what should we read into the fact that he was the CEO of QIA Americas? Does that say anything about QIA's investment priorities or how the focus is going to change, especially as we were talking about Qatar is preparing for a massive influx of new cash?
Yeah, well, I think, it's interesting. I mean, there is one interpretation of this, which is to say, as your previous guest, Ryan Bohl, was saying, that, in some ways Qatar is preparing for a Trump administration. We all know that the Trump White House and Trump himself takes a very transactional approach. So the fact that the QIA is putting in this person who knows the US, who has been investing in there for a very long time, established the QIA office in America, and had been leading this sort of push to create more investments there. So the fact that he's now running the fund, maybe this is a political signal to the Trump administration that, they want to continue to be a big investor into the US, and they want to use that as a way of boosting ties. But as you mentioned, I think, also the fact that there is going to be this huge influx of gas revenue coming into Qatar very soon, and that's going to continue building up over the years to come. Qatar's going to have a lot more money to invest, and we've already seen over the course of the past couple of years that the sovereign funds out of the Middle East have become such important sources of capital globally, whether it's buyout funds in the US or big investments into Asia. They've become one of the most important places to call for any big fund manager, any big deal. And so, I think we're clearly going to see the QIA becoming a lot more aggressive in its investment push than it perhaps has been over the past few years.
Yeah, interesting to see how this all plays out. Great reporting, as always. Bloomberg's Matthew Martin joining us from Riyadh. Well, coming up, investors put in $35 billion of orders for the IPO of a Saudi Arabian financial services firm. We dig deeper into the strong demand for share sales in the kingdom and the broader region. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Baku. Well, investors have put in 131 billion riyals, that is $34.8 billion, of orders for the initial public offering of a Saudi Arabian financial services firm. United International Holdings says the IPO was covered 132 times, with a final price set at 132 riyals per share, so two 132s. For more on this, Bloomberg's Middle East equity capital markets reporter Laura Gardner-Cuesta joins me right now. But it seems like there was really strong demand for this latest share sale in the kingdom. What does it tell us more broadly about the outlook for the Saudi IPO market? So far, it's been tracking pretty strong.
Yeah, absolutely. It's quite remarkable to see these headlines, $35 billion worth of orders for a 264 million IPO. But the reality is it's not uncommon to see this, especially in the Saudi market. We've had a few so far this year, including the largest IPO of the year, Saudi Faki Care Group. That also received $91 billion worth of orders for a $700 million IPO. So it's not uncommon to see these large levels of subscriptions. I think what we need to remember is that what often happens is that investors feel that they're not getting the allocations that they would like in many of these deals, and this leads them to put in significantly larger orders than what they would actually want to receive in the final allocation. So this is, I think, what partly explains these incredibly large order books. But this is not to say there is, of course, a lot of strong demand still for Saudi IPOs and in the region more broadly.
Yeah, well, I was going to say, what is the read across to other parts of the region as well? If IPO activity and if books are being heavily oversubscribed in some of these Saudi deals, does that also translate to demand for other parts of the Gulf as well, or is this specific to just Saudi Arabia?
No, I mean, we see it across the region. Just last week, we had Lulu Retail's IPO, which was the largest IPO in the UAE. It was 1.7 billion. That also received around $31 billion of $31 billion of orders. So I think the oversubscription story is something that we see across the Gulf. And we're definitely seeing a lot of activity still. This week we had Talabat announcing their intention to float. This is also likely to see strong demand. We've reported that Talabat's valuation might be as large or larger, than its parent Delivery Hero. So I think going into the end of the year, despite the fact that it's almost mid-November, I think there's still a lot of activity and a lot of demand for the IPOs in this region.
Very clear. Bloomberg's Middle East Equity Capital Markets reporter Laura Gardner-Cuesta, thank you so much for bringing us that report. Now, Saudi Arabia has replaced the executive overseeing its plan to build the $1.5 trillion megacity development known as NEOM. A statement on X says Ayman Al-Mudayfar is taking over from Nadmi Al-Nasser, who has been CEO since 2018. NEOM is the biggest project within Crown Prince Mohammed bin Salman's plans for diversifying the oil-dependent economy. Now, the project has faced setbacks, including reduced expectations for the number of residents in the line and difficulties in securing funding. All right, well, we're heading into a big markets day today. A quick look at how some of these equity futures are faring. It is a day of red, as you can see on the screen. A bit of a dip yesterday for Wall Street. Some of the major indices did end the day up in the red. The S&P pulled back around 0.3% by the close. The Nasdaq down about 0.1%. So some of that negative momentum is continuing overnight as well. The handover from Asia Pacific hasn't been pretty. And as we head into the US session, European session, all these equity futures are pointing lower as well. And coming up, hear why Dhabi Capital says it is the heyday for the Trump trade and for all the right reasons. More on their market strategy next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Billionaires, entrepreneurs, and a news anchor set to join Donald Trump's leadership team as the U.S. president-elect continues to announce high-profile appointments. India's latest stock market debut, a rapid delivery service, Swiggy, draws in $1.3 billion in its IPO, with shares set to start trading this hour. And leaders at COP29 float new taxes and levies on fossil fuel stocks, bonds, and business class flights to combat climate change. We are live in Baku. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace at the COP29 conference in Baku, Azerbaijan, getting you up to speed on the markets. As we went to the break, I was just telling you that the close for Wall Street was slightly negative yesterday. Some of that post-election rally has started to fizzle out. Just a little bit, though, but S&P still holding gains above 6,000. Futures dipping this morning, down about 15 basis points. Nasdaq futures also seen opening about 0.2% weaker. Tesla stock dropped around 6% yesterday, though, of course, we are up significantly since those U.S. elections. The stock is up 45%. The focus today is going to be on CPI. So let's just flip the board and take a look at what the expectations are going into today, because the core number has been pretty sticky. The market is pricing in or expecting that core monthly number to come in at 0.3% in October and the headline figure to come in at 0.2%. But if it does come in at 0.3%, it does still indicate that the core number is quite sticky, third month in a row, and namely on back of that services CPI component. So services continue to be quite sticky versus goods, which are subtracting from the overall index. And what this has meant is that the market's expectations of rate cuts have also started to get dialed back. Now we only have 2 full rate cuts priced in by mid-June of next year. And this, of course, in tandem with the re-election of Donald Trump and people putting on those Trump trades, so to speak. So let's also check in on how markets in Asia are faring this morning. Avril is in our Singapore studio. Avril, just give us an overview of why some of these Asian markets are trading in the red.
Yeah, we're seeing the region's benchmark hovering near those 2-month lows. As to the why, look at how the Hang Seng has been faring. I mean, it's on its 4th session of declines. It's broken through a key support level. It is on track to erasing the gain since late September. Part of this because of China's NPC disappointment, the bad data out of the mainland, but also part of the Trump trade. So it doesn't look good. And so much so that Mark Cranfield of the MLive team says, even if we see Tencent, which earnings is due today, come through with either sustained or acceleration of its revenue growth, that's not going to do very much to lift the mood, given how bad things are. So this is what we're seeing in the Asia Pacific and the why the Chinese stocks are down today, Jumana.
Avril, thank you so much. Now, Indian food delivery firm Swiggy has just debuted on Mumbai's exchange after a 1.3 billion initial public offering. The market debut positions Swiggy against larger listed rivals Zomato and privately held Zepto in India's rapid delivery space. So here you can see that the shares that started trading initially, they popped around 6.7%, but now pared back some of those initial gains, but still around 3.6% higher at the first stab at trade. So a strong initial reaction there for Swiggy on its debut. All right, let's broaden the conversation and talk more about market direction with Rashmi Garg, a senior portfolio manager at Dhabi Capital. Well, Rashmi, it feels as though the markets are sort of taking a breather today, taking stock of all of this price action that has taken place over the last few days. Certainly a huge run-up in stocks in the last 5 days, ever since the U.S. elections. Do you think that this rally and strong momentum in stock markets is going to continue, or is most of this so-called positivity around the Trump trade fully priced in at this point?
That's a very interesting question, Jumana. I mean, I think if you look at it from a fundamental perspective, being a US president is a big deal. And if you look at Trump and his government, I mean, he himself is a businessman and he's surrounded by a lot of business veterans. So in general, we expect his presidency to be a positive for businesses, and which by extension means that it is positive for the stock market as well. Now, having said that, of course, the valuations have not been very benign. I mean, they were not already benign when the whole Trump trade started, maybe a month before the election results. And then, of course, it's only moved higher. So it is quite natural that we see these, small downturns in the market as this goes on. But also, we need to see more clarity around his policies. But right now, we still have a more positive view on the market.
Yeah, I feel as though most people share your view, obviously, because of deregulation, because of imminent or expected tax cuts, I should say, not imminent tax cuts. So those are the positive drivers, at least at a corporate level. One of the concerns has been the ballooning of the size of the budget deficit over the last few years, and it's expected to continue moving wider. What do you make of this announcement this morning that the Trump administration is opening up this Department of Government Efficiencies to reduce some government spending leveled at state departments? Is that going to move the needle, do you think, on deficits? Is it a big deal for investors?
We have to see that, but I think prima facie it is a positive, because for the first time, I mean, if we compare this to the last presidency of Trump, we always knew that Trump has been a proponent of debt, and which doesn't bode very well for the fiscal deficit or the budget deficit. But, Elon Musk famously talked about cutting 2 trillion up to 2 trillion from the budget, from the government budget, and he is well known for slashing costs. We saw him do that at X, formerly Twitter. So, and he's joined by Vivek Ramaswamy as well. So that is something that makes us more positive about it. And then the second thing is also, for the first time, actually, Trump talked about fiscal discipline. So if you remember the speech that he gave after he won Pennsylvania and Florida, he said, we are going to bring this back in the right direction. We are going to reduce debt. We are going to improve the fiscal situation of the US. So given those things, I think I would really wait to hear from them in terms of their policy and then, form an opinion. But right now, I think it is definitely more positive compared to his last presidency.
Rashmi, one of the other themes that has occurred in the last couple of days is a broadening of the market rally. For so much of this year, it was very concentrated in a handful of those magnificent 7 stocks. But what we have seen the last few days is a broadening of the rally. Even small caps have been participating. Is this what you expect to continue in the coming months as well? Can we continue to see this type of a broadening and broader sort of participation in the stock market rally?
Yes, Jumana. So we are more positive on small and mid-cap stocks post the Trump victory. And the reason for that being that, one, of course, the small and mid-caps, they benefit from an America First policy more than the large caps, the mega caps, because these also have a significant share of their revenues coming from outside the US. And secondly, if we talk about tax cuts, then these companies, again, disproportionately benefit because, these are the companies that are probably paying a slightly higher slab of taxes. And we also have a rate cutting environment in the US right now. So far, it has been on track. So all these things are positive. And if you look at it on a 2-year basis, actually, the Russell hasn't really done that much. While we've seen massive gains in the S&P and the large cap indices, Russell on a 2-year basis hasn't done that much. It's only in the last maybe couple of months that we've seen an uptick in this index. So yes, we do think that this broadening does have legs.
So interesting. Rashmi, always great to have you on. Thank you so much for joining us. Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. Thank you very much. Well, coming up, we are live in Baku here in Azerbaijan for the COP29 Climate Summit as world leaders pitch ideas for funding in an effort to combat climate change. More on this next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Baku. To Africa now, and unprecedented foreign exchange pressures and economic challenges throughout Africa, which have materially impacted MultiChoice's earnings. Now, speaking with Bloomberg's chief Africa correspondent, Jennifer Zabazaja, the CEO, Calvo Mawela, discussed the continuing challenges the South African broadcaster faces as it awaits regulatory approval for a takeover by Canal+.
We really found ourselves with the impact of the full devaluation of the Naira. In the last year, it was about 4 billion rands. This time around is about 1.3 billion rands as well, which then has impact on our trading performance during this period. It's the first time that we're having the full impact of the Naira devaluations as it devalued last year in the second half, from about 460, now sitting at about 1735. So that has material impact on our financials for the past 6 months. Yeah.
Joining me now is to discuss is Bloomberg's Jennifer Zabazaja in Johannesburg. Jen, how does this MultiChoice CEO see FX volatility continuing to affect their bottom line? We talk about some of the challenges of getting the deal with Canal+ across the line, but how does the macro also weigh in?
Right. I mean, the macro has really been key to a lot of the struggles that the company has been dealing with, as you heard there from Calvo. And then he told me a little bit more about that. I mean, it wasn't just Nigeria and the currency volatility that they've seen there that put a dent in their profits. It was also just the global weak macroeconomic environment, that putting a dent on what consumers are able to use and how much disposable income they're actually able to have, which then therefore means less subscribers. So he was describing how this has been an issue that's compounded in a number of markets that they operate in, not just Nigeria. There was also Zambia, Ghana. There were drought issues that made it difficult for this company. But really what Calvo has said, since now they are seeing the full effects of this in their first real full year, they are saying that they've had to bring up a lot of their cost-saving measures that they were going to implement next year and try and find new ways to ensure that there is value for subscribers to continue to use them. And so some of those ways he talked about was being sure that customers want to come to them, making sure that they have the right value incentive to come. They have English Premier League. That's one of the incentives that he talked about with subscribers on the continent. But still, it's been a struggle for them. He says that this is temporary, and hopefully a lot of their cost-saving measures will only be temporary, and next year they'll be able to see some growth, notwithstanding, of course, this potential deal with Canal Plus.
Yeah, so interesting. Jennifer, thank you so much, and looking forward to circling back with you in about 20 minutes' time. That was Chief Africa Correspondent Jennifer Sabasasha. Well, coming up, we're going to talk more about COP29, in addition to Indian online food ordering company Swiggy, which has made its market debut. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Baku. Now, with a firm focus on climate finance at this year's COP29 summit, leaders are pitching fresh ideas about funding sources. There is also a potential stumbling block created by former President Donald Trump's return to the White House. And ExxonMobil CEO Darren Woods told me how the oil giant views those political changes.
We don't set our business plans based on the political agendas or who's in the White House or what party's in control. We look at the fundamentals and making sure that the investments that we're making are advantaged versus the rest of industry, will be resilient in the bottom of the cycle, and then we make these plans and commit to that.
For more, I'm joined by Bloomberg senior climate reporter Akshat Rathi, who also is the host of a podcast that everyone should be listening to called Zero. I've been listening to it, and it's fantastic. It's really helped me with my own preparation into COP29.
Oh, that's great.
Let's just start with the number one theme, I guess, for this COP. I mean, we can go into many different sub-areas, but of course, financing. It's been called the Finance COP. What hope is there for a breakthrough on this financing initiative and those goals that have been set?
It does feel dire because the United States is the world's largest economy, and you would expect the United States to be contributing the largest sum towards this financing. And as we know, President-elect Donald Trump says he's unlikely to be contributing. He might be pulling out of the Paris Agreement very soon after taking power. But from the perspective of finance over here, there are two big figures being talked about. One, that the world is going to need something like $1 trillion to have annual towards developing countries so that they can deal with climate impacts, but also develop clean energy and adapt to the warming. The amount that might come from developed countries, rich countries, may be much smaller, maybe $300 billion. And that difference is large right now, but relative to the previous sums that were given, which are $100 billion annually, it will still be a rise. And that is the big negotiation that is happening right now. Early days, we still have another week to go.
It's interesting because when I spoke to the World Bank President Ajay Banga yesterday, I put that question to him, and he said, if you say trillions of dollars, people's eyes just sort of glaze over. These are huge sums. And therefore, the question there is not getting to that absolute sum, but how do we increase the sum on an annual basis? And he seems to think that the only way you can get there is with private sector involvement and by creating the right conditions for the private sector to get involved.
I think that is right, because trillions of dollars will only come from the private sector. But those private sector investors are only willing to come if there is support and there is certainty around the kinds of investments that they make. And so this $300 billion could be money that either comes directly from governments or comes from people like Ajay Banga's World Bank, multilateral development banks that can de-risk a project and allow private investors a decent return, if not a hefty return, on their investments.
You sat down for a very long conversation with the ExxonMobil CEO, Darren Woods. We interviewed him on TV, but then I think you sat down for 30, 40 minutes. And many people are surprised to hear that the CEO of an oil and gas company, they call themselves an energy company, is actually present at COP29. I even asked him if he felt welcome. But what would you say is the role that these energy companies are actually going to play in the transition? Is it a paradox that they're here?
It is quite a turnaround for ExxonMobil specifically. This was only the second time an Exxon CEO had ever come to a COP. The last time was last year at COP28 in Dubai. And for an energy company and an oil and gas company, it does seem like a paradoxical position, but you must recognize they are making investments that are 5, 10, 15 years in advance. So if they see the trajectory of the world going towards clean energy and they don't want to be just an oil and gas company, but an energy company, they have to develop energy sources that are decarbonized. And that is the message that Darren Woods came to COP with, that he wants clean energy solutions, that he can provide them. He can provide them in the form of molecules, if not electrons.
Yeah, that's really interesting. And it also, their approach has been to be almost less ambitious with their climate targets and stick to them, as opposed to some of the other oil companies out there that went really aggressive and have had to dial back in the last few years. And that seems to be somewhat of a theme as well. Is it just that many companies around the world have to be more realistic with their climate targets now? What is actually achievable?
You can say some of it is also luck. You know, ExxonMobil lucked out with a really good find in Guyana with its oil field, and that has contributed its returns relative to other oil majors. But I think what must be recognized is the energy transition is going to be dynamic. So you have to back the fundamentals, but realize that the long-term trajectory is towards clean energy. So all the oil majors are increasing the sums they are investing in clean energy, but some are going faster than the others for sure.
So interesting. It's just, I just find it fascinating that they're here, that they're at COP29 to begin with. Bloomberg senior climate reporter Akshat Rathi, thank you very much. And as I mentioned at the top, he is host of a podcast, Bloomberg Zero, so you should check that one out as well. All right, we're going to take a look now at how Swiggy stock is faring. It just debuted on the Mumbai exchange, trading quite positive, so up 3.6%. Initially popped around 6.7% on the first bit of trade. Now we've come down, but still very positive. So for more on the Indian online food ordering companies market debut, let's bring in Bloomberg intelligence analyst Nathan Naidu. Nathan, so Zomato is the biggest food delivery app in India. How does Swiggy's valuation compare to that of its rival?
Thank you. So Swiggy's forward EV to sales is at about 40% discount to Zomato, and we think that's still rich because compared to global peers, Swiggy is at a staggering 80% premium to that, based on that multiple. And we think that valuation is lofty, and as you mentioned, the hype kind of died down a little bit with the share price, coming down a little midday. And one of the few reasons that we think Swiggy's valuation is lofty, and of course that's how likely it will break even and how long it would need to do that.
So Swiggy has said that they want to invest about 1/4 of its IPO proceeds into quick commerce. Why quick commerce, and what are the opportunities that they're seeing there?
So quick commerce is a market potential by 2028 that could be twice as large as online food delivery in India. And that's why that's all the rage. You have all these big, well-funded rivals. For example, Flipkart, India's biggest e-commerce platform, is coming into the space. And of course, the already profitable Zomato, which is an arch rival to Swiggy, it's also investing heavily into the space. What that means for Swiggy is 2 more years of potentially cash burn, with our model calculating that it won't break even until 2027. That is, of course, unless it managed to grow and reach a scale faster than peers. But based on expansion plans from Zomato and also from Zepto, we think Swiggy's plans potentially are less aggressive than the duo.
Yeah. Well, your report says that Swiggy is still loss-making and that it might not achieve a profit until 2027. That's a long time for investors to wait. Why is it going to take so long for them to achieve profitability?
Yeah, to add to my points earlier, the reason it might take that long is because, if we look at its cash on the books as well as potential IPO proceeds that it will get from the IPO that we just witnessed, that could only cover its cash burn for 8 quarters or maybe slightly more. Meanwhile, our scenario is telling us that it might not break even for another 3 years. And if you do the math, Swiggy might not have enough cash to burn unless, of course, something changes, during that period. And one of those factors that can help Swiggy is that it reaches scale fast. But based on the expansion plans in growing dark store network, we think Swiggy is it's taking a slightly less aggressive stance versus Zomato as well as Zepto, which might IPO in the next 12 months.
Right. Yes. So interesting. A Bloomberg intelligence analyst, Nathan Naidu, thank you so much for bringing us that report on Swiggy. A quick look at equity futures as we round up the first hour of our show. And there's a lot of red on the screen today. Markets are taking a bit of a breather after a very strong run. As of late, all of the futures are dipping into the red. But that is it for our first hour of Horizons Middle East and Africa. I'm Joanna Bersachi in Baku. Stay with us for the second hour as Jennifer Zabazaja joins me from Johannesburg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. U.S. President-elect Donald Trump builds his Middle East team, appointing real estate investor Steve Witkoff as special envoy and former Arkansas Governor Mike Huckabee as ambassador to Israel, while Elon Musk is set to drive a new efficiency push. The dollar holds gains near a 2-year high ahead of US CPI data. The Fed's Kashkari says only inflation can derail a December rate cut. And we're live from COP29 in Baku. Joining me this hour, Greek Prime Minister Kyriakos Mitsotakis and US White House climate advisor Ali Zaidi. Good morning, everybody. It has just gone 9 a.m. across the Emirates. I'm Joanna Bersachi at the COP29 conference in Baku, Azerbaijan. It is our 3rd day here, Jen.
Yeah, great work that you're doing on the ground there, Jumana. And I'm Jennifer Zabasaja in Johannesburg, where it has just gone 7 a.m. Welcome, of course, to the second hour of Horizons Middle East and Africa, and some great interviews that you have coming up there on the ground, Jumana.
Yeah, exciting stuff, including in a short while, we're going to be speaking to the U.S. climate envoy, Ali Zaidi. Lots of questions about U.S.'s future leadership role in the coming months with the changing administration. But for now, let's just circle in on these markets. It's CPI day and a big day for markets as far as data expectations are concerned and what the Fed is going to do come December. The market is only pricing in 60% chance of a rate cut come December now. But as Neil Kashkari was saying, that could all change with an inflation print that surprises to the downside. Equally, if we get an upside surprise, then that even further adds to the market's pricing out of rate cut expectations for the next year. Anyway, this is where we stand for futures now. S&P still sitting above 6,000, leaning towards the red. Same for NASDAQ. The USD also in focus. 10-year Treasury sitting at 4.42%, so holding around this level. We've come a long way in the last couple of sessions. We're stabilizing around 4.4, however. Then taking a look as well at some of the handover from the Asian stocks. Asia Pacific also deeply in the red now, down 1%. And we've been talking about the big divergence in some of these global stock markets markets, U.S. equities have been massively outperforming global MSCI indices, so something to bear in mind. And a quick look at the terminal chart as well before we move on. This is the market's expectations of CPI today, and worth pointing out that services inflation continues to be quite sticky, while goods inflation has been turning negative. So if there is an upward surprise, it will come from the services front. And also bear in mind that we may get some hurricane-related effects. You could see an upward demand for shelter-related costs, for used cars, again, on back of Hurricane Elaine. So something to bear in mind as well as we head into the CPI number. Now, switching back to the Middle East, the Israel Defense Forces says it has destroyed the majority of the Hezbollah weapon storage and missile production facilities in the southern suburbs of Beirut over the past few weeks. Meanwhile, U.S. President-elect Donald Trump's choice of 3 ardently pro-Israel lawmakers for top foreign policy jobs underscores that his focus will be on heightening support for Israel and boxing in Iran once he takes office. So joining us to discuss further is Bloomberg's Dan Williams in Jerusalem. Dan, maybe let's just start with Trump's selection and the incoming cabinet. What did the choices tell us about any plans he might have to perhaps revive some of those naturalization talks or normalization talks between Israel and Saudi Arabia? And of course, this comes on the heels of the Crown Prince himself just a few days ago describing what Israel is doing in Gaza as a, quote, genocide.
Yes, indeed. That remark by Mohammed Al Sowaidi would have been received perhaps not so well in Israel, given that it's still hoping to achieve a normalization deal with Saudi Arabia. Indeed, under the current Biden administration, this was described as the president as a U.S. national security priority. So you will have actually 3 consecutive U.S. administrations working on it. One imagines that the Saudi priority is to put rhetorical pressure on Israel while also extending olive branch in the form of normalization with Israel, as long as Israel puts some momentum into creating a Palestinian state. Then you have the Americans, the newly elected president, stacking his cabinet within days of his re-election with these pro-Israel figures. I think the message here is both to Israel's foes. Keep in mind that Israel is still in a state of war more than a year after war began from the Gaza Strip. So the U.S. signal, the incoming administration signal, is that it will support Israel, though it wants those wars wrapped up. And at the same time, that this is a good time for potential future friends of Israel to sign up with that normalization deal that Trump really launched back in 2020 during his first term.
Dan, let's turn to what's happening in Lebanon. I mean, we heard from the IDF. They said they've destroyed most of Hezbollah's weapon sites in Beirut. And yet we're still hearing about rocket and drone attacks happening in Lebanon. And yesterday, even some news about people being killed in northern Israel. I mean, what's the contradiction here? What are we missing?
I think really the distinction here is between the short-range missiles and rockets and drones, which Hezbollah has been using pretty exclusively against Israel over the past 6 weeks or so, and the longer-range missiles, the precision-guided missiles that Israel would consider a real threat to its national security. Now, obviously, for those on the receiving end, there's no great difference. But in terms of Hezbollah's ability to recover from this very withering Israeli counteroffensive of the last 2 months, it would really have to threaten Israeli infrastructure sites, Israeli airports, seaports, electricity, power, etc. It doesn't appear to have those capabilities right now, and that would appear to be largely because of this concentration of Israeli airstrikes in southern Beirut, the real heartland of Hezbollah. And Lebanese will tell you there have been some very serious airstrikes there in recent nights and recent weeks. So it would appear that Israel has focused its efforts on those strategic weapons, which might even allow it, potentially in the coming days, to announce as part of a Lebanon truce that it has achieved the majority of its objectives. It has effectively neutralized the threat to its national security from Hezbollah. And it is now time to wrap up that war in a time frame that would really suit the incoming Trump administration.
And indeed, this is also coming at a time where the Biden administration keep pushing for a ceasefire, but with no letting up, it would seem. Bloomberg's Dan Williams in Jerusalem, thank you very much for the reporting. Now, President-elect Donald Trump has announced that Elon Musk and Vivek Ramaswamy will lead a new department designed to dismantle government bureaucracy. For more, senior editor Bill Ferries joins us now. So the department is called the Department of Government Efficiency, which I believe spells out Doge. I don't know if that's a coincidence. Talk to us about how this government this division is likely to work, and what is the timeline for it getting up and running?
Yeah, I don't think there's any coincidence at all there in the name, Dogecoin being something that Elon Musk has promoted very heavily on Twitter and X over the years. It's really not clear how the details of this department, which is probably going to be more like some kind of a commission giving advice, will work. And also whether there will be other members of it, whether it'll have a staff and a budget and things like that. But the idea seems to be, as Elon Musk talked about during Trump's campaign, to try to find billions, if not trillions of dollars in government spending that can be cut over time. Donald Trump has said he wants Elon Musk and Vivek Ramaswamy to kind of wrap up their work by July 4th, 2026, to give the American people a present on the country's 250th birthday. There have been a lot of efforts over the years to find ways to make big cuts in government spending. Many of them have not succeeded. Most of them have not succeeded. $2 trillion is, of course, more than the annual budget, federal government budget for agencies, including the Pentagon. So it is a huge number. But I think those two leaders will be trying to find key recommendations to make, and then they'll have to still get that approved by Congress, which really has the power of the purse in the U.S. constitutional system.
Yeah, Bill, you mentioned the Pentagon. I mean, there has been a lot of focus over the past few days really on what Trump is building as his foreign policy and national security team. Talk about some of the other names that we've gotten, because we've gotten a raft of nominations from the president-elect over the past few days for these key positions in government.
Yeah, we've actually gotten several in the past few hours. They include Pete Hegseth. He's a Fox News personality, an Army veteran who has been tapped apparently to be the next Secretary of Defense. It'll be very interesting to see how that goes down, even among Republican senators in Washington. He's not someone who is very widely known or known to have a lot of connections in the foreign affairs or defense field, but he is a loyalist to President Trump. He certainly comes from central casting, as the president likes to say, so we'll see how that goes. He also announced that he'd like to pick John Ratcliffe, who had been his director of national intelligence in the final months of his first term, to be his CIA director. I think broadly what you're getting here are very loyal supporters of President Trump, none of those kind of Republican foreign policy establishment types that were involved in the first couple years of his administration, and also people who are very pro-Israel, very hard line on places like Iran and on China. So I think that's one consistent marker across the names we've seen so far.
Yeah, and of course, coming at a time of complicated geopolitical factors. Senior editor there, Bill Ferries. Bill, thanks so much for that update. Thanks for joining us this morning. Now, up next, more from COP29. White House climate advisor Ali Zaidi joins Jumana on set in Baku. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Baku. Well, it's day 3 of the COP29 climate conference here in Baku, Azerbaijan, with where leaders are pitching fresh ideas about funding sources. The change in U.S. leadership with Donald Trump's return to the White House is also looming over conversations. So joining me now is U.S. White House climate advisor Ali Zaidi. Great to have you with us.
Good to be with you.
The U.S. has gained a lot of credibility in the last couple of years with the push forward with the climate agenda, the passage of the Inflation Reduction Act. But of course, we are coming now to the end of the Biden administration term. A new president is stepping back into the office, one who is known for being a lot more of a climate skeptic than President Biden is. What is your administration doing to ensure that everything that you've done, all the good work you've done on the Inflation Reduction Act, on the regulation, is going to be Trump-proofed, so to speak? It's going to be safe from being dialed back once the new administration comes in?
Yeah, the biggest investment in the durability of the climate progress we've made over the last 4 years is literally in the architecture of the Biden climate approach. We have really invested in the private sector, carrying us the distance. And when you think about the market transformation underway in the United States, 600 factories and counting being built to produce clean energy in the U.S., 96% of the electricity that's going to be added to the grid going to be clean, and $1 trillion of private investment rushing in to lift up our clean energy ambitions. I think that's the irreversibility of the momentum here. There is a singular focus in the private sector, in labor and industry, to seize this opportunity, and the U.S. is going to keep rushing to do that.
So do you think that the Inflation Reduction Act incentives are going to be durable? They will be able to withstand an incoming administration then?
I really hope so. And I think we've seen the political economy behind these incentives really grow over the course of implementation. Just a few months ago, Republicans in the House wrote to their leader saying, let's not turn back the clock on these incentives, which are producing jobs and economic opportunity in our districts. 60%, in fact, of the jobs that are created by the Inflation Reduction Act in red districts in the United States. So I think there is a political economy that's actually expanding as fast as the clean energy revolution in the U.S. That makes this durable.
Well, there's still a couple of months left as well of the administration. I do wonder if there's anything that can be done on the regulation front, because regulation can swing quite quickly, and it's set at the federal level. Is there anything that your administration is focusing on to make sure that the climate regulation stays intact as well?
Yeah, you know, one of the things we're making sure that we do on the spending front is to get as many of those resources in the hands of communities. 9 out of every $10 in the investment agenda already into the bloodstream. On the regulatory front, we really ran early this year to finalize a lot of the key regulations before May, which really, I think, ensures durability relative to this arcane statute, the Congressional Review Act. So I think because of that foresight, we have actually quite a durable regulatory regime going into the next few years.
The Azerbaijan president gave quite a fiery speech at the beginning of COP, and he took aim and criticized many of the climate critics in countries around the world who have criticized Azerbaijan for being a so-called quote-unquote petrostate and so reliant on hydrocarbons. But he did raise an interesting point, which is that the U.S. is actually the largest oil producer in the world right now, producing 13.5 million barrels a day of oil. So how can you, on one hand, be the world's largest fossil fuel producer, but on the other hand, lead the charge on climate efforts?
You know, climate, I think, action depends on where are we investing more infrastructure dollars and what's the pace of decarbonization. In the U.S., when President Biden took office, we were on a trajectory for 18, maybe 20% emissions reductions by the end of the decade. We've doubled that pace of decarbonization. And through, I think, a common sense set of actions, we could double it again. If you look at where capital expenditure is taking place in the U.S., it's going almost exclusively to clean energy capital intensive projects being built out. That is the destiny we're writing ourselves for the future. You know, one of the hallmarks of the Biden approach to the energy transition is to make sure that there is energy availability for the demand that exists on the market today. No shocks, no upward price pressure.
Yeah.
That is a facilitator of decarbonization, not something that slows it down. So I think we've pursued both of these objectives vigorously. And my message to everybody around the world is, it doesn't matter what your energy mix is today, we can all travel the distance and get there, keep 1.5 degrees within reach.
Yeah. So let me just ask you about the financing aspect. I know the negotiations are still ongoing, so I'm not going to ask you for numbers or anything, but there is a view out there that China does need to be paying up. It's the world's second largest economy, one of the biggest fossil fuel emitters in the world. What is the likelihood that actually we start to see more financing come through from China?
You know, the Chinese stepped up at Sunnylands in an engagement with the U.S. Last year to committing to include methane and other non-CO2 greenhouse gases in their nationally determined contribution. they should be making steep cuts in this 2035 target that they submit to the Paris process, the NDCs, so that we can keep 1.5 degrees alive for the world. And they need to be stepping up, just like everybody, to bring their resources to the table, help everybody move in the direction of a climate-adapted and climate-smart future. They have the resources. They are, I think, in certain cases, investing in this work around the world. The goal here for us is to bring as many countries together in this quantitative financial goal, to set a bold ambition that's fit for purpose, to land that plane this COP, so that we can move forward with that in hand.
Yeah, I just, just to round things up, final question for you here. Are you worried about the U.S.'s credibility going forwards? Because, yes, this administration is 4 years, maybe 8 years, but the goals are set for 2050. If you look back over the course of the last 10, 20 years ago, the U.S. were late to ratify Kyoto Protocol. The U.S. under Trump pulled out of the Paris framework. What message does that send to the rest of the world if there's not consistency with U.S. messaging on climate policy?
Look, I think it's unfortunate to have federal leadership that's pulling in the wrong direction on a crisis of this global magnitude and an economic opportunity that's so big for American businesses and American workers. But if you look at the track record of the U.S. in terms of performance, we have met the targets we've set for the globe. We've met the targets we've set for ourselves. We're going to continue to do that.
Great. Thank you so much for your time. That was U.S. White House Climate Advisor Ali Zaidi. We appreciate you speaking to us today. Well, coming up, Nigeria's President Tinubu meets with Saudi Arabia's Crown Prince in Riyadh. The West African nation's chasing a deal with the Saudi government for trade facilities to support its economic reform program. We'll have the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Nigeria is seeking a $5 billion trade facility from Saudi Arabia to shore up capital for its economic reform program. Nigerian President Bola Tinubu met Crown Prince Mohammed bin Salman in Riyadh on the sidelines of the joint Arab-Islamic summit to discuss the deal with the Saudi government. Let's bring in Bloomberg's Ndiro Oganga, who is in Kigali, Rwanda, for us. So, Ndiro, talk to us about this deal and really where it stands.
Jen, so these two countries are seeking to enhance cooperation in several areas, for example, oil and gas, agriculture, and also infrastructure. And if we zoom in on these sectors, if you look at oil and gas, Nigeria is producing below capacity 1.3 million barrels, while the budget target is 1.7 million barrels. If you look at agriculture, it has been ravaged by changes in climate, and they've been unable to absorb this shock seamlessly. And infrastructure is suffering from legacy issues. So these areas make sense to be key priority in terms of investment. We are also seeing that the Council, through the Kingdom, will be seeking to replicate projects it's done in India, it's done in Indonesia and Pakistan. And you have the Saudi Agricultural and Livestock Investment Co. saying they're ready and looking forward to closing several deals in Nigeria before the end of the year. The Kingdom will also be pumping some form of financial support into Nigeria to support some of the reforms by President Bola Ahmed Tinubu, including the foreign exchange reforms that they've been carrying out. And all this is happening within a very short period of time. The Nigeria-Saudi Council was formed just a year ago, and both sides are very keen to get the work started in Nigeria.
Yeah, and Ndiro, I mean, you bring up some of those reforms that we have seen from President Tinubu. I mean, how much effort have they really made in terms of reforming the economy?
Then they've made quite significant effort, and President Tinubu is beginning to beat his chest and say these reforms are yielding results. He says that they've attracted nearly $30 billion in terms of foreign direct investment, and they can attribute this to improved investor perception of Nigeria. There's a sense of open governance, there's a sense of transparency, and there's also a sense of shift towards favorable policy. And these reforms have been lauded by bodies like the IMF, who say the Nigerian currency currently is at the cheapest it's ever been, almost as if encouraging investors to go and invest in Nigeria. President Tinubu also looks like the man who's willing to make tough decisions, unlike his predecessors. If we look at some of these reforms, they devalue their currency to try and converge the official and parallel rate. As a result, their currency lost nearly 70% of its value to the dollar. The central bank has been tightening monetary policy rate. They've cleared dollar backlog. And they also removed fuel subsidy, which was really painful. And while these reforms are really great for external investment, internally, companies are paying the price. We have top 6 of the companies in Nigeria have lost almost $385 million from devaluation. There's a high cost of doing business because interest rates are high. And also, inflation is high because removal of fuel subsidies, double fuel costs, triple transport costs for goods and services. And for a country where living wages are low, half of the population lives below the poverty line, things are really tough.
Great reporting there. Bloomberg's Ndiro Ganga in Kigali, Rwanda for us. We have a lot more coming up, including the Greek Prime Minister. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Elon Musk is going to drive U.S. President-elect Donald Trump's government efficiency push. The billionaire will lead a new department with Trump's former Republican rival, Vivek Ramaswamy. The dollar holds gains near a 2-year high ahead of US CPI data. The Fed's Kashkari says only inflation can derail a December rate cut. And we're continuing our live coverage from COP29 in Baku. Coming up, Greek Prime Minister Kyriakos Mitsotakis joins Jumana there on set. But right now, it is just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Baku, where it has just gone 9:30 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jen, do you want to take a quick look at how some of these markets are faring before we move on to our special guest?
Yes, of course, Jumana. Thanks for that. It is a busy day. It is CPI day, as we mentioned just earlier there. So let's just take a look at where markets are positioned ahead of the trading day. As you can see here, we're seeing U.S. equity futures taking a bit of a breather since we have seen that ongoing rally since the U.S. election. S&P futures, though, still above that 6,000 point. But we did see the S&P end Tuesday with its first close, with its first down print since the U.S. election rally that we have been seeing. NASDAQ futures also trending downwards there. We're paying close attention to the 10-year yield as well. Currently unchanged, as you can see there on the board at 4.42. But we did see yields really fluctuating on Tuesday. They were rising between 9 and 13 basis points, potentially reflecting the unease from investors about that CPI data print that we will get later today. Potentially then, again, that having an effect on what the Fed does. And again, how many cuts that we're getting right now. We're seeing traders pricing in about 2 U.S. rate cuts through June against almost 4 seen just about a week ago. And the Bloomberg dollar still seeing some upward momentum, continuing its post-election rally. The Bloomberg dollar spot index hitting its highest since 2022. And we're seeing other G10 currencies and really EM currencies broadly having an effect as a result of that. But let's just zero in on CPI. We mentioned that today is CPI day, excuse me. Take a look at this chart, though, because this is showing that core services inflation accounted for 3.6 percentage points of the 3.3% core CPI rate in September. So the question will really be, what is this inflation print going to show? How will it then affect what we see from the Fed next? And then how are investors going to interpret what we see potentially from a new Trump administration and the policies that he implements and how that could affect inflation over the next few months? But a lot to pay attention to when it comes to markets. For now, though, Jumana, let's send it back to you in Baku.
Thank you so much, Jan. Well, it is day 3 of the COP29 climate conference here in Baku, Azerbaijan. And as world leaders discuss new ways to finance the climate change challenge, Donald Trump's return to the White House remains a topic of discussion. Joining me right now is Greek Prime Minister Kyriakos Mitsotakis. It's wonderful to have you with us,
Good morning.
Mr. Prime
Thanks for
Minister.
having
Thank
me.
you so much. I've been here a couple of days now, and I've had talks with several people, from policymakers to some of the big leaders, and I've got to say it's difficult not to feel a little bit disheartened if you look at the state and the direction of travel. Many agencies are warning that this is going to be the warmest year on record. We continue to see the effects of climate change wreaking disaster and havoc around the continent, even in Europe. What is your feeling of where we are in climate ambitions versus where we need to get to?
I've been coming to these gatherings for many years now, and there seems to be a repeating pattern of ambitious targets and expectations which eventually are not met. On the other hand, if you look at Europe, important changes are being made towards the energy transition, but we all understand that these changes need to be accelerated. I come from a Mediterranean country, and the Mediterranean is a hotbed for climate change. You saw what happened in Spain. We had similar floods, thank God with less loss of human life last year in Greece. So my concern is that as much as we focus on long-term mitigation, and Greece is certainly doing its part, we need to place more emphasis on short-term adaptation and helping our people cope with climate disasters, which we know will happen with increased frequency. So when we think about funding, this is not just about helping the poorer countries with their energy transition. It is also helping more mature economies dealing with the impact of climate change today, which makes the whole debate even more complicated.
Absolutely, but let me just ask you a Greece-specific question. Last year, obviously, many wildfires, there are droughts as well. I wonder if Greece has to put in a national strategy to deal with, say, adequate water supply in the years ahead. Is that something that you're thinking about?
Well, first of all, when you look at the headline numbers, no European country has brought down its emissions faster since 2005 than Greece. We produce more than 50% of our electricity from renewables, and this will go up to 80% within the next 5 to 6 years. So we're certainly doing our part in terms of making the energy transition work for Greece. At the same time, we understand that we need to focus more on adaptation. We're spending more than 2 billion euros on civil protection. Our number one obligation is to protect human lives when a catastrophic climate event strikes. But of course, managing our water supplies is going to become a critical priority for the foreseeable future. We know we're faced with extreme weather events and with droughts, and we have a very ambitious plan to make sure that we use our water supplies with a maximum amount of efficiency. So for us, in Greece, the climate crisis is already here. And that is why I'm also advocating at the European level to devote more funds and cooperation to the question of adaptation. And the Mediterranean countries will play a leading role in this initiative going forward as we talk about our inter-European financing envelope for climate.
One of the conversation topics looming large here, again, in a climate conference, is the return of President Trump to the White House. The U.S. for the last couple of years have gained a lot of credibility on the climate front. There is a concern that some of that U.S. leadership may fall to the wayside, given that President Trump's own stance is a bit more skeptical towards many of these climate ambitions and the climate agenda. Who do you think will pick up the helm? Is it going to be Europe leading the charge forward on climate discussions, or is it going to be China?
Well, first of all, let's see what President-elect Trump will actually do, and I do hope that we won't see a repeat of the U.S. leaving, the Paris agreements. 2 quick points. First of all, Europe is leading on the climate transition, but we account for 6% of global emissions, so we clearly cannot do this on our own. But we do understand that focusing on clean tech, also from a perspective of strategic autonomy, is going to be particularly important for Europe, and we do intend to dedicate significant funds toward that direction. When I look at the U.S., there's national policy, but there's also a clean tech revolution taking place in the U.S., financed primarily by private capital. So the U.S. being a very innovative economy, I do expect that many innovative solutions which will help us address the climate crisis will still come from the U.S.
Well, I was reading that you actually have had a call with the President-elect Trump. Can you give us any insights into, well, not specifically what was discussed, but what you are expecting in his second term vis-a-vis relations with Europe?
Well, I had a very friendly call with President Trump. I'm a relatively experienced leader, so I had an opportunity to work with him during his first mandate. And of course, I stressed the importance of the Greek-U.S. relations. Greece is a pillar of stability in the Eastern Mediterranean, and we've worked very closely with the U.S., and I do expect this relationship to continue. When I look at what's happening in the U.S. from Europe's point of view, I think it emphasizes the need to work very hard to support our strategic autonomy and to make sure that the European economy becomes more competitive. Flip back to what Draghi told us in his report. We discussed this at the last European Council. And I think it is time to move from words to actions. We have a very clear list of deliverables in terms of how we can make Europe more competitive. I think there was already a sense of urgency that we're lagging behind even before the election of President Trump to the White House. I think we will address this question with a renewed sense of urgency now.
What if President Trump starts applying tariffs on European goods? Will there be an incentive for Europe to retaliate? Then you enter into this tit-for-tat trade war?
I'm a big believer in free trade. And I don't believe in tariffs in principle, and I think that a trade war would be bad both for the U.S. and for Europe. I do think there is a possibility on the U.S.-European relationship to work with President Trump and to find a win-win solution. For example, Europe will be looking to import more liquefied natural gas from the U.S. And I'm talking about LNG because we understand that in the interim, until renewables hit their full potential, we will need natural gas for the foreseeable future. That will certainly help us in terms of our trade balance with the U.S. So I think there are ways to discuss with the U.S. administration and to find the win-win solutions. I'm a big believer in the transatlantic partnership. And I think when we look at the big global challenges that the world is facing, we need to continue to work strongly with the U.S. to address those challenges.
Yeah. Well, one thing that I do question is Trump's approach to multilateral frameworks. And we know from his first term that he sort of preferred a bilateral approach with leaders around the world. What does that do to Europe's collective standing and stance vis-a-vis approaching some of these relationships? And specifically, when you talk about trade and when you talk about defense, is Europe going to be unified?
I think it's a good question, and I think we all have bilateral relations with the U.S. Greece certainly has one. We have a defense cooperation agreement because defense is a national prerogative. But when it comes to trade, I do need to point out that this is a competence of the European Commission, and we will negotiate with the U.S. as a European Union. And of course, we have much more leverage in doing so. So I think you will see a combination of us strengthening our bilateral ties, but also speaking with one voice when it comes to Europe. The challenge for Europe is to first of all get to the point where we speak with one voice on these issues. But again, as I told you, there is a renewed sense of urgency in terms of focusing on European competitiveness. We have a European Commission that is very much committed in moving towards that direction. So I'm cautiously optimistic that we will be able to deliver on our agenda.
So let me just end on a Greece-specific question on the economy. Greece actually has been growing much faster than other economies in Europe the last couple of years. The core European countries are struggling. Periphery countries are actually doing much better. Do you see Greece's economy as being able to continue and sustain the momentum that's in place already?
I don't think many people would have placed their bets 5 or 6 years ago that Greece would be a country with very stable public finances, growing much faster than the Eurozone, bringing down our debt at a very, very fast pace, attracting investment, creating new jobs. Yes, I'm very optimistic about the Greek economy in the short to medium term. We have 3 more years in our term. We have a stable government that is able to deliver on reforms. We continue to bring in investment. We had a record year when it comes to tourism. We're investing a lot in cutting-edge sectors, including tech. So I think we have a very good growth story, which is certainly attracting the interest of the international financial community. And I do expect Greek growth to continue to deliver. My number one focus is on making sure that we converge with Europe at a fast pace, and we sort of make up for the lost ground of the last decade. And of course, bringing up our wages and addressing the cost of living crisis is my number one priority these days.
Fantastic. Prime Minister, thank you so much for speaking with us. That was the Greek Prime Minister, Kyriakos Mitsotakis. Thank you very much. Now, coming up, unprecedented currency pressures materially impact South Africa's MultiChoice Group's earnings as the broadcaster awaits regulatory approval for a takeover by Canal+. More on this next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. To Africa now, an entertainment company, MultiChoice Group, suffered an interim loss this week as the group battled against mounting currency pressures and subscriber attrition. MultiChoice CEO Calvo Mawela discussed the continuing challenges the South African broadcaster faces as it awaits regulatory approval for a takeover by Canal+. Take a listen.
We really found ourselves with the impact of the full devaluation of the Naira. In the last year, it was about 4 billion rands. This time around is about 1.3 billion rands as well, which then has impact on our trading performance during this period. It's the first time that we're having the full impact of the Naira devaluations as it devalued last year in the second half, from about 460, now sitting at about 1735. So that has material impact on our financials for the past 6 months, yeah.
So, I mean, talk about what that means then going forward. Are you expecting this to continue?
Yeah, so far it has stabilized around the 1.7 mark for the past few months. What we have done on our side was we need to offset this forex headwind. What we have done was implemented cost savings, which were around the same number as the forex hit of about 1.3 billion rands in the first half. And that we did by accelerating some of the savings that we're anticipating to bring forward in the next financial years. By so doing, we're able to then offset this forex headwinds. However, that also then gets impacted by subscribers that are coming through, because with inflation sitting at over 30% in Nigeria, you can imagine how hard it is for anybody to adjust when inflation is at those levels. What we have done on our part is to keep our costs under tight management as much as possible on the Nigerian business, whilst at the same time making sure that we remain top of mind as a product, that it can be something of value to them through the hardships that they are going through. But what we know for a fact is that these hardships don't go on permanently forever. There is a period that will go through, so we need to ride this wave. And all the interventions that the government has made, it's something that all business people that operated in Nigeria or are still operating in Nigeria have asked for, which means let's remove the fuel subsidy, let the currency float, and the market determine the price of the currency. We think these interventions are good because they are short-term pain for long-term gain.
And so then, I mean, when you think about, I mean, I noticed in your results, you said this is one of the most challenging operating environments that the group has had to deal with in its history. Do you expect that to continue that in 2025, or do you believe, and I'm not just talking about Nigeria, I mean in other markets that you are in, do you expect this to ease off at some point, and when, if so?
Yeah, we think this 1.7 mark, 1,700 mark, it's the worst that it will go to in terms of what we are seeing. We have not seen a depreciation of higher percentages further than these numbers. And how we manage this business is that once we are aware of what the trading position is in terms of the Naira compared to the dollar, we are able to adjust the business to that and take into account that currencies will depreciate on the African continent and put some other value beyond that. That is how we manage this business.
MultiChoice CEO Calvo Mawela discussing earnings and challenges facing the broadcaster there with Jen. Now, some breaking news, which has just crossed the Bloomberg. Klarna Group has confidentially submitted a draft IPO registration to the Securities and Exchange Commission. The number of shares to be offered and the price range have yet to be determined. But this is some breaking news that has just crossed the wires now. And up next, sources tell us the UK is in the final stages of securing a free trade agreement with a group of oil-rich Middle Eastern nations. We'll discuss the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Now, Bloomberg sources say the UK is now in the final stages of negotiating a free trade agreement with a group of oil-rich Middle Eastern nations, including Saudi Arabia. The GCC is a priority for the government of Prime Minister Keir Starmer as it looks to boost economic growth and, of course, attract foreign investment. For more on this, let's bring in our Middle East economics and government reporter, Abir Abu Omar, who also wrote a story on this, and it's available now on the Bloomberg. So, Abir, I mean, how imminent is this deal, and why has it taken so long?
Good morning, Jen. Yes, this is a trade deal that we've been chasing for quite a while now. It's been in the works for years. But according to our sources and the way we reported the story yesterday, it looks like the deal is imminent. Actually, according to several sources that we spoke to for this story, this deal could come to fruition as soon as this year, which is the next couple of months. So we know that some of the reasons that it might have been delayed is obviously over the past 2 years, the UK politics have seen some shifts. We've seen multiple governments come to place, and that, was bound to delay the process for some of these trade talks, not just with the GCC, but with some other countries. But this one is quite important for the UK, right? Because the Gulf, the GCC, the 6 nations that make up the bloc, have a combined gross domestic product of over $2 trillion. And so there's a lot of exchanged goods to be part of the mix. We have, here in Dubai and the wider UAE, there's a huge expat community from the UK. So these relationships are quite important for the UK, but also for the wider GCC, including Saudi Arabia, including the UAE and the other ones.
Abir, how much does this actually add from an economic standpoint? What are we talking about in terms of millions or billions to be gained from a monetary standpoint for both UK and Saudi?
Yes, so look, according to the latest data, what we know is the amount of traded goods between the GCC bloc and the UK have amounted to $73 billion, as you guys have shown earlier. That amount could be increased by 16% over the long term and also add to the UK's economy to reach over $2 billion in economic gains for the UK. But also, it doesn't just come with the economic benefits, right? This could add a lot of political clout to Prime Minister Keir Starmer's government, which has yet to sign any FTA since they came to power in July. So if this were to be signed, and this is an FTA that's been in negotiations for quite a while now, that would add to, the Labour government's political gain, but it also could pave the way for further FTAs. Jumana, we talk a lot about the UAE CPIs, for example, a form of FTAs, comprehensive economic partnership agreements is what the government here calls them. And so these are done with specific countries. They're done in a slightly more quick manner than a traditional FTA. So, the question is open for, could we see some sort of CEPA come to fruition from the UAE's end, or, other smaller agreements from other GCC members with the UK? So it's economic gain, it's political gain, and we should see by the end of the year.
Yeah. Interesting point re UAE as well. Bloomberg's Middle East economics and government reporter Abir Abu Hamar. We are still at COP29, and you can hear it's really getting busy over here. We have a lot more interviews coming up, and one of the interviews that I want to flag is a sit-down with Jennifer Morgan, Germany's State Secretary and Special Envoy for International Climate Action. That is at 9:15 London time. But that was it for our show today. Horizons Middle East and Africa. I'm Jumana Versace in Baku alongside Jennifer in Johannesburg.